Welcome back to Everything Tesla Facts, everyone. For the past few weeks, Tesla has been in the news. As it continuously looks for methods to raise its market valuation, the EV company always makes headlines. In an effort to make the stock more affordable, the corporation has now announced a 3-to-1 stock split. Like the majority of news about the electric vehicle firm, this has sparked a number of responses from experts and investors, who have set alarming price goals for Tesla's stock following the split. After the anticipated stock split, analysts like Meet Kevin have explained why they believe the company will reach these price estimates. How does Kevin feel about the separation of Tesla stock? Let's investigate. Before we start, though, if you enjoy this kind of information, please click the like button, subscribe, and enable notifications to be informed about all that is going on with Tesla. Tesla just declared that it intends to divide its stock 3-to-1. At Tesla's annual meeting on August 4, 2022, shareholders will vote on the split, which the company hopes will help reset the stock's market price. This has led to a number of responses from stock analysts, such as Meet Kevin, who thinks that the company may benefit from the split and that it will probably improve the performance of its shares. American financial expert Kevin is well known for having a keen interest in investments, since it is typical for companies to outperform the S&P 500, a stock market index that tracks 500 publicly traded domestic companies in the United States. During post-stock split periods, he thinks that the proposed 3-to-1 split of Tesla's stock could be very beneficial to both the company and investors. To put it simply, a 3-to-1 stock split implies that for every Tesla share you already possess, you will receive 3 shares, and the value of each new share will be one of its previous value. The entire value of your shares, however, remains unchanged. This is typically done when the price of a company's shares rises to a point where the typical investor cannot afford them. The stock price of Tesla is approximately $714 at the time of recording. Assuming the price remains constant on the split date, each Tesla share will now be valued around $238. More investors can now afford the shares at this low price. Tesla claims that there has been a lot of demand from retail investors in purchasing the company's stock, and that the stock split will also make its common stock more available to these investors. Therefore, a stock split might be the best course of action for growing Tesla's investor base. What is Meet Kevin's opinion on this matter then? Kevin believes that compared to other tech stock forecasts and exorbitant values, Tesla's projected profitability are far more achievable. Kevin said he is bullish on the stock and sees this as a chance to boost his holdings of Tesla shares in response to the expected stock split, since a rise in Tesla's stock value invariably translates into higher profits for its investors. This is undoubtedly the belief of the majority of Tesla bulls. In a similar vein, Kevin shared his reasons for believing Tesla will surpass the $10 trillion market valuation in the next 10 years after visiting this year's Cyber Rodeo. He claims that because Tesla manufactures robotics, it leads the robotics industry and, consequently, the stock market. Given that Tesla can implement a copy-and-paste technique to replicate more factories worldwide, Kevin anticipates that the company will announce 5 to 10 new gigafactories in the next 2 years. Tesla is shifting its focus from making cars to being an artificial intelligence firm. Its recent declarations of intentions to explore AI in the future have been, to put it mildly, impressive. There is still much to look forward to, even though Tesla is experiencing several setbacks and the company's stock may still have a rough road ahead of it in the near future. Any hurdles the company has may only need to be short-term because the demand for Tesla's EVs is steadily increasing in China and other nations as well. In actuality, Kevin thinks Tesla is unlikely to fail and has supply chain potential. This is because Tesla was able to use the appropriate training and expertise to develop its new products. Regarding Tesla's latest offerings, Kevin believes that the company's robotic humanoid could be yet another revolutionary development. He went on to address the project's main worry, which for the majority of people was the possibility that humans will be replaced by robots. The expert claims that Tesla's Optimus will increase productivity and free up time for more lucrative endeavors rather than menial tasks. Given Kevin's assessment of Tesla's prospects for success, it's safe to assume that he has high hopes for the business and, consequently, its stock. Fortunately, Meet Kevin and a number of other stock analysts concur that Tesla stock is unquestionably a good investment with a median price objective of less than $1,000. Several financial analysts that CNN Money tracks have classified Tesla as a consensus buy. Indeed, 12 out of 45 experts suggested holding Tesla stock for the long term. 12 recommended buying it, and 12 classified it as a strong buy when the stock split was announced in June. This indicates that experts have a high opinion on Tesla. However, why not? The business consistently performs better than expected. Tesla had previously announced aspirations to produce a very sophisticated automobile model similar to the robotaxi and Cybertruck. Furthermore, Tesla might have a significant competitive edge over the majority of other businesses in the sector, given that these are recent developments in the EV sector as a whole. Additionally, Tesla's updated vehicle models are taking center stage. The Model 3 was one of the top 10 cars sold in 2021. While the automaker sold over 167,572 of its Model S. In 2022, the EV firm has also been using a number of strategies to increase its market value, which could lead to future price increases that are so high that, in the absence of suitable policies, the stock might simply be out of reach for the typical investor in Tesla. Undoubtedly, Tesla has grown significantly, but the business has also faced difficulties in the market in recent months. Because of this, setting an excessively high price objective for Tesla stock might not be the best course of action, as a number of variables are likely to prevent the stock from rising, as it ought to. Kevin feels the same way. The financial analyst stated in this tweet that the stock market seems overpriced and that a 2024 split estimate of about $3,000 per share would be wildly irrational. What are the opinions of others? Recently, the global British bank, Barclays, changed its price objective for Tesla to about $370 per share. Brian Johnson, an analyst at Barclays, increased the company's price objective for Tesla from about $325, citing the possibility that the company's Q2 production and profits won't live up to expectations given that its Shanghai output recently fell from 315,000 to 251,000. Additionally, RBC Capital and UBS set their objectives for Tesla shares at about $1,100. Patrick Hummel, a UBS analyst, gave three primary justifications for this price target. First, the significant order backlog brought on by Tesla's two new gigafactories increased output. The second is Tesla's growing profit margins, which are a result of higher prices and innovative processes. Last but not least, the EV company has a competitive advantage over rival electric car manufacturers because to its enhanced supply chain. Additionally, he stated that the manufacturing of chips, battery systems, and software will enable Tesla to achieve tremendous growth and profitability. Kevin might concur with that, given that the American YouTuber thinks Tesla has the capacity to outperform its rivals for many years. According to his most recent tweet, the analyst disclosed that he owns over 50% of Tesla stock. Although this isn't usually the case, it is possible that Tesla's stock price will increase following the split. The company's fundamentals better predict whether the stock price will increase following the split. Fortunately, this is not the first time that Tesla's stock has split. The shares then had a price increase following the company's 5-to-1 split on August 31, 2020. Similarly, investors responded favorably to Amazon's recent 24-1 split. This does not imply that Tesla's stock price will rise following the split, but it does provide us with some insight into what to anticipate. Additionally, not to get ahead of myself, a lot can happen before the stock split is approved by shareholders. As Kevin said, it's best to avoid making mistakes that could cause one's financial portfolio to collapse, because it's not a good idea to put all your eggs in one basket. Although it is impossible to predict with certainty if Tesla's stock price would increase or decrease following the split, it is reasonable to assume that investor decisions to purchase the company's stock have been impacted ever since the split was announced. But what do you think? Is Kevin's optimistic forecast about Tesla correct? Please share your thoughts in the comments box below. And while you're still here, click on one of these two videos. I'll see you there.